The momentum sparked across the market by Fed Chair Jerome Powell's speech last Friday is gradually fizzling out. Interestingly, the head of the U.S. Central Bank made no mention of a slow, gradual rate cut. And this leaves open the possibility of a different scenario. If the upcoming data is alarmingly weak, the Fed Reserve may be prepared to act decisively and swiftly. Thus, this week's economic reports from the United States and the euro area could bolster demand for both risk assets and the greenback. However, a bearish shift for the dollar seems inevitable. Over the past 2 years, the greenback strength has been largely driven by the Fed's aggressive monetary policy. But come September 18, this trend may reverse. The question is, how much will the regulator cut rates? Will it be a gentle quarter-point reduction or a more severe half-point cut? The former would act as a brake on the dollar's slide, while the latter could trigger its steep drop. The greenback's current position near 13-month low looks like mere consolidation before the next move lower. Notably, the US dollar index, which measures the value of the dollar against a basket of 6 foreign currencies, spent the first half of Tuesday's trading session drifting in the 100.80 and 100.90 range. While the dollar hovered near its lowest level in more than a year, other currencies remained close to their historical highs. Meanwhile, the situation on Wall Street was mixed. The Dow Jones, for instance, closed at a record high on a Monday. In contrast, the broad-based S&P 500 index edged lower, weighing down by the weakness in the dominant tech giants. The S&P 500 kicked off the Tuesday's trading session on the down note, fluctuating in a range bounded by the levels of 5,602 and 5,651 points. The euro, which usually moves in tandem with the US stock market, also weakened slightly against the greenback. According to our analysts, this decline aligns well with the previously anticipated correction. The correction's boundaries are set close to the local high of the medium-term trend within the range of 1.1200 and 1.1250, which the price has recently approached. To continue gaining value, the euro needs to consolidate above the level of 1.1250. If this condition is met, the single currency may reach new levels. However, it's important to consider that the current correction remains relevant and may continue, sustaining the upward momentum. At the same time, the euro received its second negative signal from the German economy this week, following yesterday's disappointing business sentiment indicator. Today's report only worsened the situation. The consumer climate index in the Eurozone's largest economy dropped to minus 22 points. And this slump suggests that hopes for a stable and sustainable recovery in Germany's economy should be postponed to a later time. By the way, today the sideways trend in most assets could also be explained by concerns about the escalating tensions in the Middle East. Under such conditions, gold acts as a reliable shelter during political and economic storms. Recently, its price nearly reached the record of $2,531.60 per ounce, recorded on August 20. On a Tuesday, gold also traded sideways within the range of $2,538 and $2,555 per ounce. By the way, the People's Bank of China stopped purchasing gold in July, given that the country is the world's largest producer and consumer of gold. Concerns about its sluggish economy and the weak demand could push gold prices down. On the other hand, the expected rate cuts in the United States and the weakening dollar could significantly boost the yuan. If Chinese companies are encouraged to sell assets worth around $1 trillion, this could push the value of the Chinese currency by up to 10%. Given that a strong yuan hurts China's economy, its future rise could hinder the country's recovery. This is yet another signal for buyers of oil who are planning to sell it to China later. And the fact is that demand may decrease. However, the oil market is currently driven by other fears and hopes. Technical analysis of prices had taken a back seat, with the most attention focused on the flow of information. For example, Brent crude surged by 3% following Libya's announcement that it shut down oil fields, which led to a halt in production and exports. As a result, Brent futures broke through the level of $80 amid speculative growth. However, they took a brief pause within the intraday range of $79.5 and $80.5 per barrel. The news flow could continue to support climbing oil prices. Traders of the Russian currency are currently awaiting the unified tax payment scheduled for Wednesday. In anticipation of this event, the ruble is gaining ground against the yuan, while its exchange rate against the dollar has once again tested the resistance area of 92.00 and 92.50 rubles. However, this move did not result in any significant shifts, and the exchange rate retreated again. Nonetheless, a steady return to this level indicates that bullish sentiment prevails among market participants. For the volume of long dollar positions to increase further, the ruble needs to consolidate above the 92.05 mark. Otherwise, fluctuations in the 90.50 and 92.50 range may persist for some time. That's all for now. We continue to follow developments in financial markets. Subscribe to our channel and follow news with us. And see you soon. Oil prices are sliding, stocks are trading in a disarray, and the dollar is wondering, where did I go wrong?